Hello, everyone. This is Mark with Semantics Trading with your daily report. So on Friday, the markets closed higher as the ES had an initial push in the early part of the session, and it closed at the highs. And the majority of the session was a very choppy one on the SPX with no direction. The VIX also ticked lower as well, a bit lower as well. The advanced decliners were pinned at the highs with NYSC stocks holding above 2,000 for a majority of the day, which shows that there's relative strength as most of this over 2,000 stocks were positive. The University of Michigan inflation expectations tick lower. The one-year expectations was 5.2%, while the forecast was 5.3%. The 5-year inflation expectations was 2.8%, while the forecast was 3%. So that means that overall, like in the long term, people expect inflation to be taken care of and go back closer to the Fed's neutral rate. The dollar and the US 10-year yield weakened, as well as gold was bid today. With the expiration of approximately 1.9 trillion in options, we saw that equities reversed a 5-day decline. And if we take a look at the Fed swaps, they are pricing in about 75 basis points of Fed tightening this month, which is still an aggressive lift as the Fed has no reason to stop being so aggressive as inflation is still printing very high. Mind you that the market does not seem to care as much as inflation as it's going with the consensus expectations of elevated high inflation as persistent. Generally speaking, this sort of thing only shakes up the market when it surprises massively. As then the markets will have to readjust to this sort of surprise data. U.S. consumer long-term inflation expectations reached a one-year low, and the reason for this was policymakers may find some satisfaction in the fact that price pressures are not becoming entrenched. And another reason why we had some optimism today was two Fed officials expressed reservations about a full point increase in July. Fed Bostic expressed concerns over such a large increase, and Fed's Bullard, who is generally a very hawkish Fed president, said that he would delay judgment until the central bank met. And he cited earlier this week suggesting that he preferred a 75 basis points of increase. If we take a look at CL, which is crude oil, we did close on crude higher. And on a technical sense, we are holding a key technical support. And as long as we hold a key technical support, I don't think this energy crisis is quite over. Rather, I think that there is much risk to the upside for energy as the hurricane season approaches, and that a lot of refineries are working at max capacity, and there are massive risks of shutdown. A storm or even a blackout can easily drive up the prices of oil. Also, winter is approaching as well in Europe, so they do have to deal with less supply due to the Russia sanctions, and I don't see any possible reason why they're able to somehow come up with very cheap, low-cost power to deal with it. And also, the bond market is showing that the market is not necessarily concerned about inflation, as it is more pricing in recession now, with the yield curve going in inversion territory. And in the medium term, I do see the yield curve steepening sometime perhaps in quarter four. And if we take a look at a Eurodollar futures, it is pricing in rate cuts in March. So as we get closer to that during the calendar year, the picture looks less bleak. And we also have midterms, and if we were to get gridlock, I think that would be a very positive thing for the market, as it gets rid of uncertainty and nothing harmful like some sort of fiscal stimulus to aggravate inflation would necessarily be another risk factor to the markets. And with that being said, this is the end of the recap. I want to thank you all for watching, and be sure to check out the link in the description for Discord, and like and subscribe if you liked the video.